Today I'm going to be answering an important question around what is a rate lock and when do I need to lock my interest rate. Hi, it's Josh Lewis, certified mortgage consultant with Bywise Mortgage in Huntington Beach, California, and the Find My Way Home Expert Network. And the whole conversation today sprang from a question that I answered in an online forum for a client. And it was a unique question, but when I answered it, I said, all of this information is applicable to all buyers and should be useful. So the question was, I am in escrow on a new build construction. It's not going to be done for about 150 days, so about 5 months out. And I said, do I need to lock my interest rate today, or when do I lock my interest rate? So let's start at the very beginning. We're going to say, what is a rate lock? What are the different rate lock terms offered? How are they priced to you? What is the pricing difference? And then how we should determine your strategy for when to best lock your loan. Let's start at the top by saying at any given time, only three things can happen with interest rates, and two of them are good. Rates can go down. We would all like that. Rates can stay flat. It's not a problem. Rates can get worse. That's the one potential bad outcome. So what is a rate lock? In simplest terms, a rate lock is insurance against that one bad outcome of rates going higher. Let's compare it to something that most of us have shopped for or at least understand. If you've ever looked at term life insurance, if you want to insure your life against death for the next 10 years, it's one price. If you want to do it for 20 years, it's a higher price, and 30 years, higher still. I ran a super quick example here online for a 40-year-old male in good health wanting to insure their life for the next 10 years. It's only $270 a year. A 40-year-old, they're only going to be 50. If they're in good health now, very unlikely they're going to die. If they want to insure their life out to 30 years, to the time they're 70 years old, it gets much more expensive and is a little over $1,100 a year. So short-term insurance is cheap. Long-term insurance is expensive. So let's look at how that plays out in terms of an interest rate. From a lender's perspective, they would rather float the loan all the way into closing and give you whatever the market rate is on that given day. For various reasons, it doesn't work that way, and we do have to eventually lock the interest rate. But for practical purposes, the shortest interest rate lock you can get is 15 days, and that's going to be your best priced term. Now let's look at an example of how this works with interest rate locks. So the shortest term that you would have is a 15-day, and those can go out as long as 180 days or somewhat longer. The long-term locks are very rarely used. So in practical purposes, we most often deal with 15, 30, 45, and 60-day rate locks. So I ran some examples this morning, and for a borrower with average credit doing a 75% loan-to-value refinance, not taking any cash out, at 2.99%, if we locked for 15 days, this borrower would get a lender credit. The lender would pay them $1,300, or more accurately, give them a little over $1,300 to put towards their closing costs. If we push that out a little bit further to 30 days, we need a 30-day rate lock. That now goes from a $1,300 credit to a $400 cost. $1,700 difference for an additional 15 days of insurance. And that's kind of an extreme example. The difference usually isn't that much. It would usually be a $500 to $700 difference between those two. But now let's look if we stretch that out to 45 days. It now costs $1,400. So again, another $1,000 for another 15 days. And if we pushed it out to 60 days, it would go up about another $800. So don't get fixed on, hey, this is the cost of extending it. And just look in this example that every additional 15 days of insurance, you're going to pay a little bit more for it. On a refinance, how do we handle this? For us, 95% plus of our refinance transactions are closed in less than 30 days. So with that, because floating a rate and dealing with market fluctuations for most people can be stressful, we will generally lock it for 30 days when we open the loan, get that thing closed, and no one has to worry about interest rate fluctuations through the transaction. If we have someone that's a little bit aggressive, they know their personality type, or they're someone that really watches the market and they're convinced that rates are going to go lower, we may float that down to get within inside of 15 days to get the absolute best pricing and then lock the loan at that point. Let's look at how that varies on a purchase. Now on a purchase, the question isn't how fast can I and my team get your loan closed, it's when is our close of escrow. Maybe you agreed to a 30-day close of escrow, but you may have agreed to a 45 or a 60 day or even longer. So if we believe that interest rates are going to go up and we need to insure ourselves against that risk, we would have to get the appropriate length of rate lock. So the important thing as part of this process is to know when we need to close, know what we think is going to happen with interest rates during that process, and then talk about your risk tolerance. If you're super risk averse and you just want to have certainty, it may make sense to lock that loan for 45 or 60 days right at the opening of escrow. If you, again, follow the markets closely and you're convinced that rates are going to stay flat or go down, and you would like to get to a cheaper lock term of 15 or 30 days, we can float until such time as you're comfortable. What I really like to go through at this point is, how do we know? How do we know the trend? If there's three things that can happen and only one is bad, how do we know when rates are likely to go up? We use, for this purposes, technical analysis. Anytime you're analyzing markets, whether it's stocks, bonds, mutual funds, you have two types of analysis. One is fundamental, and that's saying here's what's going on in the economy that's likely to impact the price of this asset, in this case a mortgage bond. And the fundamentals will play out over a longer time frame. The fundamentals will always win out in a long time frame. But in the short time frame, we're really only going on technical analysis. And the only thing you need to know about this is that we're looking at charts, and the chart of the mortgage bonds will show where we have support, meaning rates aren't likely to get worse than this, and then where we have resistance, meaning they're not likely to get better than this. I'm going to show a screenshot here of a couple different charts. The first one doesn't have any of the support and resistance levels overlaid in there. It just shows you what happened in terms of price action of mortgage bonds every day. This doesn't tell us a lot, but when we look at the support and resistance, in essence, what this does for us is it allows us to count cards in blackjack. It doesn't guarantee us that we're going to win the next hand, but it lets us know when the odds are in our favor. So as long as we have strong support below us, we're fairly comfortable floating. If we're bumped up right against strong resistance, we may want to lock it because rates are likely at their best near-term level. The only thing you need to know in terms of the technical analysis is that hopefully your loan officer understands this and can advise you on it and can let you know when the odds are in your favor, when they're against you. They should also be able to quantify the cost of different loan terms and help you come to terms with what is your risk tolerance level. Once we factor all of those in, we can determine when it's best for you to lock and what lock term we're going to use. As you can probably tell, this is a complex topic, and it's really important that you have an expert on your side. If you would like to connect with a Find My Way Home expert, use the links below. We'll get you with someone in your area that understands all of your options when it comes to locking an interest rate, and will help you answer the questions for yourself and your family. If you enjoyed this video and you want to stay up to date on all things mortgage and real estate related, use the subscribe link over here. We'd love to see you on future videos. You can also like the video and hit the notification button to get updated as we post new topics. Thanks for joining us. Hope you found it helpful.